Snap pop quiz for you. Name one stock market across the world that's delivered triple-digit returns so far this year. Go on, I'll wait. No? Well, here's one. The Zimbabwe Stock Exchange. The industrial index over there, it's risen by over 120% so far this year. Frankly, you'd be hard-pressed to find stock markets with better returns anywhere else on paper. Yes, there is a new president, but lest we forget, at this point, not much has changed in terms of fiscal, monetary or economic policy. So then, is this the right time to invest in Zimbabwe? That's a question I put to the investment principal at Summit Africa, Langa Madonko, a little earlier. I started our conversation, though, by asking him if the PE firm has already taken a position on some Zimbabwean assets.
We are already starting to look at what opportunities exist in Zimbabwe from an investment perspective. I think it would be naive to not do so. I think we like the economy. Zimbabwe, formerly known as the breadbasket of Africa. I think there's lots of opportunities that exist in terms of stimulating some of the industries, be it financial services, also for bringing back Zimbabwe to its breadbasket states in terms of addressing issues around food security and agriculture. And also, of course, there's the undeniable amount of mineral wealth that exists. And I think every investor will start to take a closer look, and it would be naive to peg and say that you only start to look at Zimbabwe after the elections next year. You already start to look at a strategy that is based on some of the rhetoric, and I think we're also then going to start to look to see if we can then also make visits and see what's actually happening on the ground.
Let's talk about the industrial index on the ZSE. That's gone up by over 120% so far this year alone. What explains that surge? Was it perhaps a case of local Zimbabwean investors deciding to put their money into equities, essentially to safeguard the value of whatever cash holdings they had?
Yes, I think that has been the main driver, that with the lack of liquidity in the markets as well, lots of people have found that the stock exchange has been a safe haven for preserving value. And I think you will notice that a lot of that investment has been from local markets, although there has been an attraction for potentially hostile takeovers from some international players who have looked at certain assets and seen them as being undervalued. And I think that has literally driven up the industrial index to the levels that it has reached. And of course, you've seen certain of the shares that are listed on the Zimbabwe Stock Exchange reach record levels. And we anticipate that that will continue to be a trend until we start to hear substantive measures on how the liquidity problem in Zimbabwe will be addressed.
But let's, just to take a contrarian perspective on this, if we strip out all the price information and just look at the fundamentals alone, consumer spending in Zimbabwe has not been particularly strong. Unemployment has been going up, and presumably that will affect these companies that are listed at the ZSE. Following that logic, shouldn't we be expecting a correction somewhere down the line, especially for the ZSE Industrial Index?
The correction will happen, but it's a function of in which direction do you think this correction will happen. And if you look at, for example, a comparison of the price to book ratios, you will see that most of these companies are trading well within very low levels in terms of that particular ratio. And a correction in the right instances, driven also on the back of the right economic stimulus that the government is promising to put into place in terms of addressing some of those fundamentals that you have addressed, such as unemployment as well as reduced spending in the by consumers. We think that the correction, even from a contrarian perspective, should be in that the share prices should lift somewhat, and there's still lots of room for them to improve in an upward direction.
How concerned should external investors who are watching this in the United States, in Europe, around here in Africa, how concerned should they be about capital controls? Because it's one thing getting money into the country, it's another thing entirely getting it out.
A lot of us are now taking a view of wait and see. Like I said before, we've heard the rhetoric around what the new leader in the country, Emmerson Mnangagwa, is promising to do. And we therefore want to see how that starts to play out in terms of rolling out some of the measures that he said he will take. And we also then will look to see how other international Bretton Woods organizations like the World Bank and entities like the IMF will start to play a role in the revitalization of Zimbabwe. And if we start to see positive sentiment coming out of those institutions, I think then the inflows may start to flow. But also what we'll need to see out of Zimbabwe is much of this rhetoric being put down into substantive policy, and we'll look to see who will be appointed as the new finance minister and what type of direction they give, as well as who will run the Reserve Bank and what type of direction they'll give with regards to exchange control.